Let me show you one of my favorite trading strategies. It is called trend reversal strategy. I use this strategy almost every day if I'm trading in the Forex market or if I'm trading in the crypto market. I'm going to show you how to actually use this strategy. It is one of the most easiest strategy you can find, whether you're trading in the 1 hour time frame or 2 hour time frame or 4 hour time frame, even if you are trading in the daily time frame. So let's get into the video and get direct to the point so that you will learn how to trade with this strategy. So let's start by defining what is a trend. This is actually a simple term. Let me define a trend for you. If you want to see an uptrend, you want to see a higher high and a higher low being formed. Okay, this is basically how an uptrend formed. Okay, this is your higher high, this is your higher high, this is your higher high, and this is also a higher high. This is your higher low, this is your higher low, this is your higher low. So basically what you're seeing is a series of movement from this level to this level. Every time price push above this level and break above here, we are set to have a new high formed, because this new high has actually picked all the liquidity that is above this recent high. And then if another high formed, it means we have a new high. This is a new high. It has picked liquidity above this last high that was formed. So also this one. So the market moves in this manner. It picks liquidity above every single high that it moves above. Okay, this is simply saying we picked an external liquidity and then retrace back to find an internal range liquidity. Okay, I'm going to show you how to actually view this before you can take trade. So as far as we have this going in this direction, we are set to have an uptrend. The only time we can say we have a downtrend is when we see this last high that was formed not able to move higher again and then crashing down to break below this level. Look at this level, this level. This was the last higher low that was formed. This one was the last higher low that was formed. So this is a higher high, higher low. Okay, so the only time we said to have a failure in this uptrend, which we expect to see a reversal, is when we see trend push below this last higher low that was formed. So in this kind of area, we can expect to start selling. We can expect to start selling, but we don't just sell ignorantly. We want to see some certain signatures and footprints of the institutions before we can sell with them. So this is why you will need to wait patiently for this to come back. Now, after we have broken below this level, which is popularly known as either a market shift or a trend reversal, we are expecting price to come back. We don't just jump into the market from this level. This is not our entry point. We will patiently wait for price to come back to this internal range liquidity so that we can sell from this area. Likewise, if we have a downtrend where we have market forming this lower low, lower high, lower low, lower high, okay, lower low, lower high, lower low. So we have a series of lower high, lower low, okay, lower high, lower low, okay, another lower low, and then a lower high. So this is a typical downtrend. This is how a downtrend forms. The only time we said to have a violation in this rule is when we see this last lower low that was created crashing back up and then taking up this level, this area. The last lower high that was formed. This is when we are set to have a shift in market trend in this downtrend. This entire movement is a downtrend. As long as we stay within this rule, we have a downtrend. I'm going to show you that in a chart. Don't worry. I'm just trying to show you this on this sketch before we go to the chart. So we will patiently wait for price to now retrace back into this range where we are expecting to take trade. The rule for taking trade with such kind of activity is what I want to show you typically when we go to the chart. We don't want to enter trade right here. We want to patiently wait for this to come back. So let me go to my chart and then I'm going to show you what I mean. So if you look at my chart right here, I have something like this. This is exactly what we saw. This is, we have trend moving. We have a higher high that was formed. Let me adjust this properly. You're going to see everything I showed you on that chart. So this is another higher high that was formed. we are, as far as we are moving like this, we have an uptrend. It started from here, higher high, another higher high, another higher high, and then right up here. Look at what happened. Let me delete everything so you can see what I'm saying. Look at what happened right up here. This was the last high low that was formed, this area. Look at it. And then we have market crashing down to this level. We have an equal low at this point. So this is our new low. We could not have any higher high. Then market came crashing into this area. So at this point, this is not where we will enter trade, this area. This is not where we are expected to enter trade. We patiently wait for price to come back to this area where we have, this is an order block. Okay, this is an order block. This last green candle is our order block that we expect price to come back to, because it is the last green candle that price printed before crashing, then creating this. Okay, now this is similar to what we have right here. We have it crashing down here. Now we are expecting price to come back to what I call an internal range liquidity. This internal range liquidity can be either an order block, a fair value gap, or a liquidity void. Let me show you that. Either an order block, fair value gap, okay, fair value gap, or a liquidity void. So these are the things we want to see. Okay, an order block, a fair value gap, or a liquidity void. This is what we want to see. Once we see such kind of thing happen, we want to see any of these before we can take trade. So we can patiently go back to our chart now and look out for that. So in this case, we have this as our order block, and then we have a fair value gap. This is the fair value gap, even in that. So this is an order block. This particular one is an order block. So this is where we can take our trade at this point. Okay, I hope you get this correctly. So this is where you can confidently enter your trade at this point. And then you make sure that your stop loss is just above this high. It's just above this high. This is your area of stop loss, above this high. And once you have such kind of movement, you can take trade with it. Let's find more of such so we can confidently say we can take trade with such kind of things. Okay, let me go to trading view and find more of this so we can see how it works. Okay, now look at this on trading view. This is typically on trading view. Let me expand it so you can see. Look at this trend, something moving from here to this area. Now this movement from here to here is an entire uptrend, because we see a higher high and a higher low formed, a higher high and a higher low formed, a higher high and a higher low formed. As far as we have this movement, we are said to have an uptrend and a higher low formed, a higher high and a higher low formed. Look at this, was the last higher low that was formed, and then price traded through it. Let me expand it for you to see. Delete everything. This was the last higher low that was formed, and then price came back and traded it. We have a complete shift in market at this point, this red candle. Okay, now what do we do once we see this? Do we enter trade at this point? No, we don't enter trade at this point because it is too risky. We will patiently wait for price to come back to an internal range liquidity. In this regard, we have this fair value gap and a breaker block. Look at it at this point. This is a fair value gap. At this point, we have this fair value gap, and look at it. Look at what I'm saying. Look at the fair value gap at this point. Price actually respected that fair value gap. Price came back and touched just the tip of this fair value gap. So this is the power of this internal range liquidity. This was the push down, and then it came back and tested this area before we sell. So this is our sell area. This is our sell area. Assuming we are taking this trade with this same strategy, this is our sell area. We will patiently sell, and then remember our stop loss is just above this last recent high. Then we can see how market move. We expand our take profit. Look at it. it came all the way to this area, even though we had some challenges around this area, but it actually worked out, you can see. So it is easy to spot this kind of entries. Let's spot as many of them as we can find. Let me find any in the downtrend so you can see how to actually practically trade with this. Now in this kind of situation, you can find some exception. You can find some exceptions, okay? Don't worry, because this is normal with trade. Look at one failed trade right here. We have it right here, and then we have a shift in this market movement. This is it. Let me show you. This was the shift in market movement. Remember, this was the last higher low, okay? This was the last higher low, and then we expected to see price came back to this area, an order block, okay, an order block. But when we entered at this point, because this was where we expected price to come, if we had entered this trade, it will be around here. It will be around this area, and then our stop loss is right above. We got stopped out. We got stopped out. Don't worry, it happens sometimes. It's normal with market. And then we have another movement right here. We have another movement, fresh movement this time around. Look at it. At this point, we have a shift in market structure. Look at this, a shift in market structure, because this is an uptrend. This entire movement was an uptrend. So we have this shift in market structure, and it is coming right back into this internal range liquidity. This time around is an order block, okay? Look at it. Look at what I'm saying. Okay, you see price actually coming back to test it at this point before crashing down. So this is our entry. This is our entry. Then our stop loss, remember our stop loss is just right above. Then this market actually walked in our direction. So this is the beauty of trading with this strategy. It is something very simple that anyone can do. Look at this. Look at this. We have this shift in market structure, but price never really came back to that area. Just let it be. If you see this kind of thing happening, just let it be, because you probably have just missed the trade. It is not a trade you should be in. If you see that happening, just let it be, forget about it. Okay, so let's find some that we can see and trade with. Let's see this. This is the mini trend that was coming, and then we saw this. Look at it, shift in market structure, or what we call a trend reversal. This was an uptrend, because we can literally see a higher high, higher high, higher high, higher low, okay, higher low and higher low. Then we had a shift, and then it came back to this order block. Look at the order block. Let me show you. Let me show you how to find it. This is it. It came back, and then we could have entered at this point. This was our point of entry. Our stop loss is just right above it, and then we had a good trade with that. So you can see this happening time and time again, time and time and time again. Let's see if we can find another one. Yes, we can see another one right here. Market was coming. This entire movement was an uptrend. We have a market shift around this area. Let me show you. We had a market shift at this point. Let me just adjust it a bit. We had a market shift at this point, and then we are expecting to see price come back to an internal range liquidity, either an order block or a fair value gap or a liquidity void. So it came back actually to this point. This was our entry point. Then we can see how price actually reacted. From that level, it actually moved in our direction. So guys, go ahead and find these over and over. You can actually see them happening time and time and time again. If you are conversant with your chart, you will literally see them happening over and over again. This was something that happened too at this point. Look at it. We see this one happening, a shift in market structure. Then price actually came back to fair value gap. This is a fair value gap. Okay, this is a fair value gap, and then price actually came back to it, and this was our entry point. Our stop loss is just right above here, and our take profit can be determined by that. So guys, this is how to spot this kind of entry. You can find them every day on your chart. Make sure you see them and you take trade with this kind of entry. If you have any question in the comments, let me know. I'll be there to answer you. Thank you guys for watching. See you next time.